Reconnect. Okay, how about now? Hello, 1, 2, 3. Hello, 1, 2, 3. We should be good now. Can you guys hear me okay? Let me go to here. Can you guys hear me okay? Let me go to. Is it okay now? All right, I'm a problem. Sorry, guys. Let me start over, but I can't kill it. Maybe I can. Hold on. Let me see if I can kill this and restart. All right, guys. This is take 2. Our take 1 was a problem. We had speakers, but not microphone. And here I use 2 different things, so that's why they work together. One is a sound bar. The other one's a high-end microphone. Now, having said that, all right, let's restart again. My apologies. It's 4:43 p.m. now on Wednesday, May 31st, 2023. A quick housekeeping. No updates on Tiger Shark modules. It's still behind. They're working on it. They keep on adding more features to it. And yes, I like the growth there, but at the same time, I need something that's working. Yeah. 2 starts of testing and add on in the module basis, but we're not there. Okay. But we have this for you. We added another webinar, as promised, taking a spot that Marshall had. You do need to register for it because it is a different webinar. It's next week at June 8th. I'm sorry, this should be May 31st, should be now. But the other ones, which want to get in, we'll be talking about 3 items. OTF, which is our main technology that we have used. ORB, we don't need him to explain ORB. We already have ORB stuff. But he's good at his take with OTF. We're also going to be talking about Gamma. Uses Gamma quite a bit, but at key areas for SPX, NDX, SPY, Fuse. So you want to take a look at that. Of course, Nations Indices, which is this chart. This is Nations Indices, these symbols. TDX, $sign, DEX, I'm sorry, TDEX, SDEX, and Volley. Okay, this is where CBOR, in my concept, in my understanding of it, this shows the concept where CBOR is behind in certain things in technology, and these guys have come in. The website called nations.com. I suggest you guys go and take a look at it before you're coming to the webinar. Okay, that's going to be next Thursday. We put together real quickly. I'll add the language there about the Gamma. But we're trying to get the registration out, let people know so you can block that time from your calendar. So next Thursday, June 8th. I already been getting comments about, hey, I'm going to be out of town. Listen, do not panic for legal reasons. Because I have a newsletter writing for PFT, Proactive Market Timing. I'm not licensed. So I was licensed, I had to go through CFTC and SEC. I can never give you actionable items. By the time they check it, it goes back to me in 30 days, it's not actionable. But because I'm exempt CTA and I've got SPMT, so I have to record everything. I can't give one advice. I cannot tell you. I can answer a technical question on the email, but I can't tell you should go long or short or all that. Why? Unless I send it to everybody at the same time, whether they're members or not, whether or they come to a webinar that's recorded, whether it's being charged or not, doesn't matter. But at least it's under the same roof and it's being recorded. That's why the moment we had a technology issue, I stopped saying anything because now the recording is not valid. Okay, this is a good recording. We're going to move forward. If I drop off or something happens here, please let us know. Okay, we've had a little bit of issues with Hotwire, but we had technology people here today trying to figure out what's wrong. It wasn't the internet, but you never know. Anyhow, so no other housekeeping items to mention. Let's move on to the calendar and then we go through charts. Okay, we're just overwhelmed a little bit. Work is a lot, but I figured between now and mid-August we're going to be extremely busy. So we'll see how things go. Any shortcomings? I apologize in advance. Thank you. Okay, Jolts came in today. I think that was an important note to pay attention. It came in better than expected, outside of the consensus range. Okay, quite a bit above the consensus itself. But look at even at the range, it beat all of that. Last time we were on the lower side, so good, big move up. I don't know what it does to Chairman Powell and company, but that's 2 weeks away from now. Chicago PMI came in today at 945, and we're down ticking. Yeah, this shows the Midwest is slowing down a little bit. Okay. So, I don't know that. This I don't know. Beijing, I don't know. Farm price at the end. Okay, tomorrow. This is a big number you want to look at. ADP. You would be on Wednesdays normally, but tomorrow would be on Thursday because we had Monday off. The number is soft. The number right now showing is soft. But 160 versus almost 300, almost half of what was last month. So I don't know what would cause us that kind of a drop. We'll see. That's a precursor of what we want to look at for Friday, which is the first Friday of the month. And they're looking for 180, and again, last one was higher than expected. So I suspect we're going to be on the upper end of the range. Are we going to pass 200? I don't know. But most likely, we'll see. Most likely. Remember, the issue is not just the number they report on this column, but it's also revisions. The employment data is always very, very jittery. So the Fed watchers, those who are involved with bonds and so forth, or trading bonds, they look for the adjustments. That's maybe a big key item. We also have ISM manufacturing tomorrow and PMI, but on ISM manufacturing, that's one. Pay attention to that. You can see it's colored as red. That's red stock important. And then construction and spending, yeah, I'm going to look at that for sure. We had no EIA today. We're going to be tomorrow. That's expected to be in the downside. Okay. Around here, construction is continuing. You just keep on seeing new places. Baker Hughes, I don't pay attention to it, but that's where we are. Okay? Let's see. Again, if you just joined us, we restarted everything. I'm recording because of, but we had no microphone. Let's go to charts quickly. Hold on. Come on. I think that's okay. We're down tick quite a bit. Huge move on Friday, but both of these have dropped off. There's some uncertainty here, obviously. We're not oversold. We're just trending that way. We're not going to see bounce here. I think it's possible for us to down tick first. And I'll probably did close my call with time and digest. I'm slightly behind, just a slightly. Because our position was very good when we started it. Okay. We took one trade, next day it went there. Some people got out, some people didn't, because we were slightly off on the SPY. I'm sorry, on the SPX, but SPY were past our limit. So those who moved fast and used their discretion, more power to them. I like to see when we get to McConnell later. We're going to get 150. Do we get there? What do we do at 40 on red thrust? We're not there yet. But you could see the pressure. We're continuous pressure on the CI. Zero lag, momentum, and trend combo is a pretty decent tool. You just don't want to abuse it. What it's saying now is, the passive loses resistance to the downside. Obviously, a news item can overtake all of that. Tonight, the volume was 1.64 to 1. We'll look at also what Larry's charts show, but this is what my own very primitive ratios show. Okay. In case of NASDAQ, it was 107. It was less of a drop, about 0.70. That's about the same. I'm saying 0.60. But remember, we started at a little bit weaker point with SPX. Why? Interest rate sensitive. Okay. Dow is down again, 134,000. Huge drop now again. Well, on transportation. And we're at dead cross. We've discussed this before. You've seen the chart, nothing new. Okay. And of course, Russell is just lagging, as you can see. I look at these things like when you go to a cell, the death cost, which is 50, goes under 200. You can see what date that was. That was 420. Don't have that problem yet. Don't have that problem there. This one was only a week ago, so this has been leading. Okay. Look at that cross, the CI cross. Remember, these CIs belong to the second subgraph, not the first. Looking at why. Transportation is a good proxy for what SPX is going to do, and Russell is a good proxy for NDX. D-trenders. Okay, let's see where we are. Okay, we're above 50, but a lot of retest has been done. You can see it, 50 and 200 are positive. Not so with transportation. Negative and negative. This is not good. Okay. Russell, negative and negative. They're both negative, so that's not good. And of course, we're way above 200 days. This is part of this is what do you call it? NVIDIA, and also a lot of money managers are hiding in the big names they think it's safe. Maybe there is, I don't know. But time will tell. It's just that we're getting a stretch now, 17%. How do we know it's a stretch? Look at this. You can see. Good. That's a 17. Okay, this is this area. Last time we were really gung-ho was November of 20. Okay. And that was, what was that value? 31%. We were 31% above 200 days. We're at half of that. So we're not that stretched, but we're up there. These trenders are used for really large pension funds, large cash positions. They use it for in and outs, and to me, these two are ominous. So we have to see. And remember, these may fall last. Market cap, number of people who are hitting it right now at safety. So we'll see. Okay. Quick mention: Momo is negative 5.41. Let's see. And then we're below 2 sigma on SP1, heading south. I still think path of least resistance is southward. Yeah. 4.6. Okay. Did these change? Let me check that. I think we should be okay. But, slightly maybe. I don't know. Okay. But the data is now updated. Okay. Vols, okay. We had a spike. Look where it went to 4 sigma and pulled back again 4 sigma. And now we're near 0. The vols were beginning to rise a little bit and then came back. So it's really dicey. Every day is difficult. I like it this way, and I like it to drop, but not in was sitting sideways. So it's a coin toss. If you have an extra coin in your pocket, use that. Don't trade it. Use that for your signaling. The other option is that you could use smoke signal. Those are the choices we have, right, Dennis? Yeah. We'll give you choices. All right. Fast money is worried now. Big money, fast money, hot money, whatever you want to call it. Begin to get a little bit worried. Why? We just crossed the center line of this range, the actual observed empirical range is 140. We're above it. We're at 145 now. Design again was 150 to 0. 150 to 100. Never seen that happen like that. This is the lowest we've had, 110. The highest was 170. So average, the center or median becomes 140. We're above. That's the first time in a while. Okay. Last time I think we were at that area. We'll see. Yeah, there we go. On April 11th of last year. Yeah. So some people out there on the big side of the ledger are putting some bets down below here, somewhere in here. I suspect, not knowing the exact positions, it would be somewhere 3,800, 3,600. If they're going below that, then that's a bigger worry. but I think you would have a higher reading. Sure, paying it below that, yeah. Right now, just based on experience, I would think 38 to 3600 area, which is quite a bit. I mean, that's a quite a bit of a drop. That's it. More than 10% drop. So, but that's what the bets are. Treasury yield. Okay, we pulled back. Again, front end is rising, as you know, with all the issues going on. Actually, the interesting thing to look at is a 1 month T-bill, not 3 months. And you see the June is just going nuts. And then a little bit below that in July and then August. Part of that has to do with Auntie Jeanette, better known as Secretary Yellen, said about that we may get behind paying some people in June, I'm sorry. So the vigilantes are demanding a better yield for that. 5 years down, 10 years down, and so is 30. So that pulled back. This will help some of the car buying. We know there are a lot of car loans are in trouble. Mortgages are doing a little bit better, but if you look at the mortgage app we looked at earlier, was just a slight improvement on the demand. But I don't know what this thing about Elon Musk is, about why houses are going to drop dramatically. I don't know where he got it. Also, he's the same guy who thought that Twitter was worth $44 billion. Okay. Now, for those kind of problems, I usually go to somebody that I respect and I view, and that's Admiral Tico. Admiral Tico last year, this time, told him in a direct message that, Elon, don't touch this. You have no clue what you're doing. That turned out to be right. So I will go and talk to Tico, and we'll chat next week. See what he thinks of the real estate market. I'm not sure it's going to be what Elon thinks. But anyway. All I know is that rents will come down a little bit because there's some supplies coming in. Aside from that, I have no clue. I'm technically wrong, yes. All right, TD. This is stuff. Okay. 3.3 on the 3 months VIX. Again, we're long June, short September. Okay, and this is the type of structure of VIX itself. Okay. I kind of like this. It's very normal. It was inverted before, but not right now. I think this is telling me we're going to get through this manufacturer, this disaster spread that we think time will tell. At least that's what the VIX players are projecting. We still don't have, now we're in an interesting area with the stock side. We always look for rendezvous points, but we're at 51 on the center line. So the slower spot at 59. So it can go either way. We can go up and make a rendezvous point up there, or sink and do this one. But not a lot though. Remember where we are. So I don't know. As far as SP2 is concerned, again neutral. That doesn't tell us much either at 53.7. Okay. Larry up and down. I forgot to post this. I'm sorry. It was a busy day. Again, we have not gotten any big day up or down. Kind of noisy either way. And both days were on the downside a little bit, but now we close at 66, 51, and 59, all negative on the three cash indices. No signal here. Very neutral, yeah. I mean, I watch Norseman, I watch Walter Deemer. They're not giving any signal here. So, okay. Now, we may be able to get also Peter to talk about this a little bit once we got him in here. Please take us a little bit of time to get our act together. Both he's been busy and I've been busy. And let's see where we are here on this system. All right. Still short on ES. This system is. It's interesting. We went all the way up to it. Still kept this short. Went short here on the EMD. By the way, this is a futures for mid cap has no margin. It's at full margin. There's no day trade margin for this. It's at full margin. Most likely because very little trades happens and there's very little liquidity. If you get trapped, you're gonna be there for a while, and that's why probably that's what they're doing. We'll long. The system is long RTY, interesting. And we're still long, and the system is with NQ. This system is not mine. The system belongs to Larry's research, as defined by the former chairman, emeritus, or actually emeritus, probably passed away actually, Paul Desmond, but was programmed by Peter. And as far as I know, to the best of my knowledge, it's the only platform that has the value data for you to put it in there. So that's what we use. Okay, what else do we have for you? If you want to see what happened with NVIDIA, there's your NVIDIA. So you can see. I mean, the other day, all we traded was off of this. Yeah. Let's see what NVIDIA was doing and then jump in and out of buying. Let me go to this chart. And let me close this. I'm sorry, this drives me nuts. I don't know where it's coming from, but that's fine. Okay. We've talked about 45 to 55 area. We've been kind of stuck right below 45 for a while. Here we bounced back up. But I think we're dealing with a little bit different angle of moving averages. So we'll see. Most likely, you're going to see a little bit lower. The key areas are always down here. This standard line area is always neutral. So I wouldn't put too much weight in there. But if it breaks lower, then we have a different problem. If it goes up, then we're back to mishmash and craziness. But if it pulls down, then maybe become directional. Right now, we don't. That's about it for me. It's a short and sweet setup. As always, it will be recorded and posted here. Again, next week, you're going to have 2 webinars from us, the Wednesday and the Thursday. Again, as a reminder, make sure you're signed up. If you want to hear about Peter Cook, who's our prime moderator in the chat room. Talk about OTF, other time frame, nations indices, and gamma, and how he uses that throughout the day to better guide us. And I really value his input because time and again, he's been with us 4 years. The performance speaks for itself. When he calls it and he says, listen, we have a top coming, you get ready for it. You can see it. It's coming. He doesn't say much, but what he does is important. Okay, so if you'd like to learn, come on in. It's on us, and we'll talk about that. We'll do that on this machine, obviously, but I'm reading charts available on all under one umbrella. Any questions for me? Again, we did have microphone issue. You know, I've noticed with this microphone, we need to plug and unplug it early on. So for next time, I apologize for that. Any comments from me? Michael, you don't have any targets? Don't you want to ask me anything on the downside? I respect that. You have a lot of good questions. Don't get me wrong. Yeah. I just think this. I think there's too many unknowns. Yeah. And that paralysis is not good for the market. It's not good for the economy. I mean, you know, you get the JOLTS numbers up, but they may not be hiring because they want to see what happens the next few weeks. So we'll see. We're in the middle of a lot of chaos. So that's the problem. But once the chaos goes away, depending on what we're on the chart, be ready for a rally. That should be a rally. So we'll see. We don't see anything here, and obviously the role of the market is to surprise you. Otherwise, the cash flow that you're expecting is not going to happen. All right. Thank you for attending this webinar. We'll see you again next week. Next Wednesday and then Thursday. Wednesday with PMT, Thursday with Peter Cook. Thank you. Bye now.